How do you do, ladies and gentlemen? I'm your host, Seth Julian, and we're going to present a backgrounder on Rolls-Royce. Down, out, or sky's the limit. We're going to break right into a little bit of what the company is, and then we'll take a look at its stock price performance. Rolls-Royce operates three core business segments: civil aerospace, power systems, and defense. The civil aerospace segment builds engines powering wide-body aircraft, regional and business jets, and offers aftermarket service. 20 years ago, that's about 2002, the firm pioneered full-service flight hour contracts with the total care package. We're going to come back to that in a moment, but it's critical to understand the stock price and the revenue stream of the company. Power systems provide power solutions to multiple end markets: defense, agriculture, marine, and power generation, basically engines, while the defense business provides military, ground vehicle, and naval propulsion solutions. These are mostly gas turbine engines for helicopters and marine vessels. Rolls-Royce Holdings plc is a United Kingdom-based engineering company focused on power and propulsion systems. Again, segments include, we've been through this already. Defense segment engaged in developing, manufacturing, and marketing sales of military aero engines, naval engines, and aftermarket services. Delivers the system based on both gas and diesel engines and electrified hybrid systems. These solutions serve its customers in the marine and infrastructure sections worldwide. Now, this is a price chart of the company going back quite a few years, about 1996. But what I want to point out is this. This, first of all, is 2002. And you see, from the time it introduces that total care package, the price of the stock, bavoom, really takes off. Here, of course, is the pandemic. And it falls into the basement quickly, and it's hovering here. So the question is this: is the stock likely to recover? And if so, why? And if not, why? You can see once they, and by the way, let me just go into a little bit of detail what that total care package meant. It meant that you paid the company earned its revenue not by the number of engines sold, but rather by the number of miles flown by those engines. And so from this, we understand quite clearly that once the plague arrives and the number of miles flown by all of its engines falls practically to zero, so too do the revenue streams. So we can see that this, by the way, this information is taken by from the 2021 annual report of the company, that in these years they're selling, they have these various deals, they're worth billions and billions of dollars, and their revenue stream, except for 2019, is fairly healthy. And this is again from the 2021 annual report. We see that they're hurting. Their free cash flow has fallen. Their operating loss is close to £2 billion. Their earnings per share is at everything is in the red here. All these in parentheses mean they're in the red. The company is not doing well from a financial perspective. This is just a division of how they're broken up. But the thing I want to point to is this: large engines, business aviation, and this is the civil aerospace. You see that civil aerospace is the largest sector, followed by the military and the defense end. But by a factor of at least 2, it's bigger than defense. That's the point I want to emphasize. The company operates and makes most of its revenue, and therefore most of its profit, on the Trent 1000 engine and those giant engines used to power giant civil aviation airplanes. Now, this is a note from the auditors, PricewaterhouseCoopers. Again, I'm not going to go into the PricewaterhouseCoopers, that they make a huge allowance. They state specifically, and I'll go to the note later on in the actual, I don't want to get too involved here, but they say specifically, they reference the fact that there is inherent uncertainty over the extent and duration of the destruction caused by COVID-19. Severe but plausible downside is based in principle on the assumption that recovery remains subdued. This is buried deep in in the notes of the annual report. Point being that they're quite aware of the fact that their revenues are in severe difficulty. And so we'll take a look at the note in a moment. But this is the point that we want to bring ourselves to. It's clear that the central problem confronting the power plant giant is the fact that it earns its revenues based on miles flown. Therefore, the potential for it to return to profit lies nearly entirely on the probability that the travel and tourism industry will recover to anything like it was before the plague struck. There are several reasons to believe that this is unlikely in the long run. The first, and in our opinion the foremost, is the economics of the air travel market, at least as it existed prior to COVID. Discount and cheap seats on airliners were the product of the expensive seats. Sold mostly to the business traveler, those subsidized the cheap seats in the back. As business travel has been reduced in what looks like a permanent way, the cost of the peasant class seats has risen significantly. This is evident already. While the pent-up demand for travel is driving whatever seat sales are taking place today, the question is whether after this pent-up demand is sated, there will be anything like the demand for travel when it was much cheaper than it is today. We are of the opinion that this is not likely. So, ladies and gentlemen, we go back to this chart. We see that it is languishing at this level here. We don't expect it to recover anytime soon. And we see that the volume that's behind this drive is quite extreme, very high volume, way, way, way above the average volume that took place during this uptake, and therefore it does not look likely to us that the price is going to recover anytime soon. So, ladies and gentlemen, with that, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.